So what is MPA, manipulative price action? I'm gonna describe what it is, pretty much from my point of view, what it is, and then we're just gonna jump straight into the charts. So MPA, from a composite operator standpoint, MPA is the persuasion of enticing retail to either buy or sell opposite of the market's overall direction. This is typically done by order flow, creating buy or sell side liquidity. Pretty straightforward definition. So from there, we can go straight into the charts. We're looking here at GU, and the very first example, we'll get to how this entry here comes about. But what I like most about this example, and what I want you to keep in mind is, as I'm going through this example, is correlating sessions and understanding liquidity and what those sessions and understanding the behavior of price within those sessions and what it's essentially doing, right? What I really like most about this example is how the previous day here set up the sale here. So that's what we're going to dive into now. First things first, if we look over here, starting off at London, this is pretty much how I broke down price here looking at London. I said here that London had created sell side liquidity. Put that there. London had created sell side liquidity. Now, from a retail perspective, retail would probably be looking at this like this is a form of support or anything of that nature. There's nothing wrong with it. But this is London created sell side liquidity, in which first come New York. New York then runs that liquidity, trades back up into the supply zone here, and then trades lower. All right. Now, the beauty of this is one specific candle. And that one specific candle is this buddy right here. And this is what I like to call a CO candle. I've seen some people call it like sponsor candles or CO candle, composite operator candle. That's what I like to call it. And these candles are typically candles that run buy or sell side liquidity, break some form of structure, and they're highly probable for price to then return to them, for price to come back and mitigate them and then continue in trend, right? So in this case here, and also in these candles, I like very minimum wick to body. So I want more body in these candles, which is showing me that there is a lot of volume within the body of the candle and not much wick, right? So there's a lot of volume in the market at this specific point here. So this CO candle here, in most instances, how typically this you would think this would play is that, you know, we run this sell side liquidity, price would continue to break, you know, scalp structure to the upside, get some form of regression, come back and mitigate that candle, and then continue higher. However, in this case, let me delete this really fast. So in this case, this CO candle here runs sell side liquidity, price trades back into the supply zone, we drop lower, which makes sense because GU is bearish. So that makes sense. However, post this move, price never comes back to mitigate this candle. So in this case, it's like it worked opposite, right? So if I run a fib here and I draw a line, I'm just going to draw a line at the 50% threshold and then the open of this candle, which will be here, right? So if I draw that line there and I scroll left, and as we can see, the chart's made a very impulsive move to the downside, and the rest of Asia, London, we're pretty much regressing, right? And then here comes New York. This is where the MPA, the manipulative price action, comes in full effect. First things first, before this price reaches this point here, the buy side liquidity that was created here. So the buy side liquidity that was created here, So here above this is where I would call it buy side. There's buy side liquidity above here. Look. It's buy side liquidity, right? Price then runs that liquidity and we break scalp structure to the downside. So now, from a retail perspective, this can be considered a CO candle in which not understanding what's going on in price, you could potentially sell here. All right. So in all actuality, this entire range here created buy side liquidity. Now, knowing better, the reason why this move right here wouldn't be as convincing for me to sell this candle is because, for one, the reaction. If we just look at momentum alone, this reaction post this move here is not very convincing, right? However, from a retail standpoint and not understanding price, right, and the behavior of price, this is definitely could be considered a CO candle to continue price lower, right? So this here was the start of the MPA, the manipulative price action here. And this here was the finish of it. Price then runs this buy side liquidity, trades, taps this 50% threshold of the CO candle here that price never mitigated, and then trades lower. Now, not understanding price and what's going on here, this too was actually MPA as well. Because from a retail perspective, this clearly looks like a scalp breaker structure to the upside, and now it looks like price is regressing back to then continue lower, to then continue higher. Right? We come back down here. This right here is what we considered a demand zone. Price reacts from there. I wouldn't be trading in this range here. This is outside of New York, but price then reacts from there. And then what potentially could have been price going higher. So the MPA happened all in New York, creating the buy side liquidity for then price to come run it and tap that. Now us knowing better, us understanding that how London the previous day set up this sale, and also if we want to add even more confluence to it, if I pull the volume in here, what I really like in seeing this was that the buy side liquidity that was created here, right, in which we ran, also the behavior of price here. I love that the volume of price spikes here, right? And my trading style is based around Wyckoff ideology. So this right here was PSY behavior, preliminary surprise. And I have this right here. PSY is where large interest begins to unload shares in quantity at a pronounced up move. Volume expands and price spread widens, signaling that a change in trend may be approaching. So come New York, having this MPA move here, this buy side liquidity created here, the MPA move here, the manipulative price action, enticing retail to sell here. So then we sweep that buy side liquidity there, right? Seeing the PSY behavior here really was all the confirmations I needed. Was all the confirmations I needed for the sale here. It's all the confirmations I needed for the sale. And And in all of these videos, I want to discuss my targets because I feel like targets are very important. In knowing as far as like how as far as like knowing how price responds before you reach that target, and just having an ideal in mind so that way you're not going blindly into a trade. So if we want to talk about targets, before I executed that trade, my target my target for that sale was here. The reason being is because this catalyst move here was essentially the catalyst to go create all of this, right? And considering that it happened in Asia, and Asia is usually known for in creating buy or sell side liquidity, and Asia is not typically known for being um, catalyst in the market as far as like completely shifting trend. Now it can, it's I'm not saying that it cannot happen. However, when it does happen, it's usually temporary, right? So considering that GU was bullish, I said, okay, if I take this sell here, what would be my first target? And it would be this catalyst move that happened in Asian, because I knew below there could be potentially a lot of sell side liquidity. So then having that in mind, we get back to it, like into the 5 minute. I could take these sessions off now because we're pretty aware of where we are. That line there, and as you can see, price then it's at the next day. The next day, London, which was a 30 to 1. Trade played out to be a 30 to 1. But this right here to me was a very great example, because for one, what I really like to see, and what I really liked about this example was that New York, all of New York was essentially manipulative price action. All of New York was. And not understanding sessions and liquidity, not understanding how the previous day London, New York had set up this sale here, then and not following price, then you wouldn't be able to catch a move like this, or essentially not get caught up in this MPA, right? So that's just the very first example, pretty straightforward to the point. Not really too complex, but I think it was I think it was really great because it just showed how the sessions correlated with each other. Also, with this trade, I really like that you had to have patience, um, to essentially for this, because it was the entire next trading day, so you had to just kind of this dreadful price action, just kind of just weigh in and seeing what exactly is going on, which is another thing that I like, that it definitely tested my patience a little bit. Because when prices kind of getting like this, it can kind of get like, you know. But so I'm gonna go ahead and wrap this one up. That's just a very first example of many of the MPA, and we will keep it rolling from there.